Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, the crypto market surpasses $2 trillion for the first time. Bitcoin now worth more than $1 trillion alone. Ethereum hitting record highs. And the biggest crypto exchange, Coinbase, out with some big new numbers ahead of its much anticipated direct listing next week. Plus, the votes are still being counted in Alabama. The results will determine whether Amazon employees unionize or not. But the verdict is in that Amazon violated labor law by firing 2 employee activists last year. We'll have all the details. And the White House rules out vaccine passports, while a new study shows Moderna's COVID vaccine lasts more than 6 months. But will new variants spreading fast? How many more boosters will we need with that? Moderna co-founder Nubar Afeyan will be my guest. All those stories in a moment, but first the markets, where equities hit all-time highs before dropping sharply. Let's get straight to Bloomberg's Katie Greifeld and Ed Ludlow with the latest. Katie, let's start with you.
Well, Emily, it was a bit of a mixed bag today. If we look at the big benchmarks, the S&P and the NASDAQ, they both ended slightly lower, down about 0.1%. The big action happened in the chip spaces, though, actually, after Republicans said they're willing to work with Democrats to address the global chip shortage. That took about 1.2% off your semiconductors index. And you did see FANGs outperform a bit today, breaking away from the broader tech sector and notching a gain. But in general, you are starting to see volatility start to leave the tech space. If we look at the NASDAQ 100's volatility index, that's ticker VXN, it's close to its lowest level in about a year after a pretty rocky start to 2021. Creeping lower now, and this next chart helps explain why. If we look at the NASDAQ 100's daily trading range, how much the index moves in a given day, it's been getting smaller and smaller. You can see it widened in a big way at the start of the year as Treasury yields surged and took the market by surprise. But that bond market move has started to cool just a little bit. And Ed, now you're starting to see tech stocks calm down as well.
Yeah, interesting. I'm climbing out the saddle with Peloton, one of the best performers on the NASDAQ 100 today, up almost 6%. Coverage initiated at Credit Suisse, a price target of $164 a share. They're talking about the trifecta of wellness, that Peloton will continue to benefit from these new trends that came out of COVID-19. More exercise, more class-based workouts, more people using technologies to work out. And you can see that really reflected in the gains that the stock saw on Tuesday. Interesting that Lululemon also felt the love, up almost 3.5%. It's another company that's really invested in technology for people working out. And it's raised this idea with me around stickiness. I love that word, stickiness. All of these things that were cool, all these things that became hot during COVID, will they continue to be popular going forward? So it's interesting to also see Zoom up almost 2% and Netflix up almost 0.7% on Tuesday without any real catalyst. Another big trend that we carried over, of course, from the COVID era is electrification. And look at General Motors out today announcing a battery electric version of the Chevy pickup. And you can see that investors really liked it. The stock had been lower but ended Tuesday up almost 1.5%. Tesla kind of treading water. Tesla, the main rival, it's now heating up. Tesla has its Cybertruck, GM has the electric Hummer, and now the battery electric pickup, the Chevy, and then you've got Rivian coming in and backed by Amazon as well. Flip up the boards, though, and look at the story a year to date. It's really interesting. Yes, Tesla was the story of 2020, but as the years gone on, not that chart, anyway, we'll go with it. Final one that I'm watching, Applied Materials. Listen, the chip sector, when we're talking about semis, we're talking about spending a lot of money to fix the supply issue, build more capacity. Applied Materials, they're the company that builds the machines, that builds the semiconductors. But during an analyst event today, the stock dropped because they didn't give us any clues about what's to come in the next 2 to 3 years. They just gave us the outlook for 2024. And with such a microscope on this stock, the best performer on the Philadelphia Semiconductor Index, I think analysts were looking for a little bit more. Lots of action in the markets, though, lots of story names. But I know that you're looking at crypto as well, Emily.
Indeed I am. Bloomberg's Ed Ludlow. Thank you so much. Katie Greifeld as well. Just a week before plans to go public, Coinbase reveals big first quarter numbers, saying it expects to report $730 million to $800 million in profit in the first quarter of the year. Coinbase also saying it likely generated $1.8 billion in revenue in that time, 56 million verified users. For more now, we're joined by Bloomberg's Sonali Basak. And Sonali, I've seen so many tech companies go public with no profits at all, losses. In fact, so these are pretty big numbers for Coinbase, aren't they?
Exactly. Investors like profitability, although we know they're a little afraid of the Bitcoin volatility. But the profitability is significant. It's more than double, Emily, what it earned in all of 2020. That just shows how far the crypto boom can take you. And in terms of revenue, in the first 3 months of the year, it surpassed all of what it brought in revenue in all of last year. And as we know, pandemic year, a lot of people stayed home trading crypto. So the numbers at first glance are very good walking into next week. But the thing is, they did not give a forecast.
Right, they didn't give revenue targets. Is that a problem, along with all of the skepticism and regulatory scrutiny that's surely ahead?
Yeah, exactly. Those things are hard to ignore, right? I mean, the thing about the regulatory scrutiny is we knew that some of that was there. The question is, how much does that ramp up into the Gary Gensler era? It's kind of an unknown. Some think he'll be friendly towards crypto. Others have noticed he's really pointed out the exchanges in particular as an area of concern. Another risk factor, right, and a different way to think about Coinbase's listing, they think about it in terms of price cycles rather than just quarters. So even they say don't really worry about 3 months, think about the cycles that crypto goes through, and they've been through 4 major cycles already. Question is, where are we in this cycle?
Well, exactly. Let's talk about major cycles. The crypto market surpassing $2 trillion for the first time. Bitcoin worth $1 trillion. The entire market doubling in just 2 months. So how fast is a cycle?
Yeah, it's incredible because you can also see it plateauing just a little bit in more recent days and weeks, even though you've seen major news over the last week. Goldman Sachs, Morgan Stanley, major firms, Visa, PayPal, more news of major firms really embracing this in bigger ways. So what is the marginal value as companies start to pour into this market in a bigger way? Separately, what about the other cryptos, right? Are some of them in bubble territory, and where do they go from here? These are all real questions. I posed that plateauing issue to Mike Novogratz a little earlier today of Galaxy Digital, and he made the point that you had made just now that it's still doubled this year. So is it where it should be? Well, what does that do for trading? The trading in the first 3 months of the year that has really fueled a lot of this Coinbase revenue that we're seeing.
Absolutely. We're going to hear more from your interview with Mike Novogratz later this hour. That said, when it comes to the Coinbase direct listing next week, what are you watching? What are you hearing from investors about how excited they are? Yes, Coinbase is making a lot of money, but yes, this is an unproven market and we don't know where it's going.
Yeah, and the other thing about it too is you and I spoke to the CEO of Kraken last week. They're not the only game in town, right? Do you put money towards Coinbase as it's going public at this very high valuation, or do you invest in something else, right? These are real question marks right now. We will see how next week works. It's a direct listing, Emily. That's the other thing that's exciting about this listing. It's the first real one on the NASDAQ. It's the first major technology listing on the NASDAQ. As a direct listing, I went down as, just a matter of love of the game to look at how much they were paying for this IPO. They said they were paying about $35 million worth of one-time expenses tied to this direct listing. That's not so bad. Will it convince more people to use the model? See how next week goes.
All right. Well, we'll be watching. Bloomberg Sonali Basak, thank you so much for that update. Coming up, Biden's tax plan is as big as Trump's trade war, how big tech and pharmaceuticals are in the crosshairs. And Amazon, Jeff Bezos, weighs in. We'll have the details. Speaking of Amazon, the vice president of the company's cloud-based services, Dave Brown, will be among our guests Wednesday in our Bloomberg Tech special Chip Crunch. We're going to examine the global supply shortage and talk to the CEOs at nearly every stage of the production process, including Micron CEO Sanjay Mehrotra, Global Foundries CEO Thomas Caulfield. We will be covering the chip shortage from all angles in our special Wednesday. This is Bloomberg. The tax plan President Biden laid out last week will likely hit tech and pharma particularly hard, although the challenge for legislators will be to minimize loopholes that could diminish the impact according to tax experts. I want to bring in Bloomberg's Laura Davison, who's been covering this in depth for us. What stands out here, Laura, to you?
Well, really, tech and pharma have had the run of the tax code for the past couple decades. They've had all of the tax breaks, advantages to them, and they had the flexibility because they were largely an IP, intellectual property-driven business to move their assets all over the globe to be able to take advantage of low tax rates in the Caribbean or in Ireland or wherever they wanted to go. And basically what Biden's saying here is, nope, no matter where in the world you are, you're going to pay a 21% rate. So that really cuts down a lot of the creative tax planning that tech has been able to take advantage of for years.
Now, very interesting development today in response to the president's plan. Jeff Bezos released a statement saying we support the Biden administration's focus on making bold investments in American infrastructure. Both Democrats and Republicans have supported infrastructure in the past, and it is the right time to work together to make this happen. We recognize this investment will require concessions from all sides, both on the specifics of what's included as well as how it gets paid for. We're supportive of a rise in the corporate tax rate. We look forward to Congress and the administration coming together to find the right balanced solution that maintains or enhances U.S. competitiveness. It's slightly long, but I wanted to read it in full because it is so unusual to hear Jeff Bezos come forward in that way and put a stake in the ground. What do you make of this?
So this could actually end up proving to be a really smart strategy for Bezos and Amazon politically here. You look at the tax plan, of course, that would probably hurt them. But on the other side of the bill, this whole infrastructure plan, they stand to benefit a ton from upgraded roads and bridges, airports, having access to better electric vehicle technology, charging stations around the country, having better broadband access. I mean, it helps Amazon's business grow, essentially. Connects them to consumers better, and it connects consumers to the company. So this could be a really good thing for them, and I think they recognize that. And second, by saying, hey, we're willing to make some concessions and accept a little bit of a tax increase, it gives them a seat at the table in the way that other companies aren't at the moment, of saying, look, we're willing to agree with you. I'm sure there are things in there that in the Biden plan that they don't like, but this allows them to go into the Treasury Department, go into the White House and have these conversations in a way that other companies haven't really warmed up to yet.
So what does the tax plan ultimately mean for big tech companies like Amazon?
So it likely means a pretty significant tax increase. Biden has called for an increase of the corporate rate to 28% and also kind of limits on how many tax breaks and deductions you can use. So tech companies have really used the R&D tax credit in many years to whittle down their tax bills. Also, an exemption for stock-based compensation has also been huge in tech. And Biden is basically putting limits on that. So, kind of the what we've seen in years past of companies being able to pay, 5% taxes, 10% in taxes, they're going to be closer to that, mid to high 20s going forward if Biden is able to push forward with this plan.
So talk to us about the likelihood of this getting through Congress. As Bezos said, it's going to be, face certainly scrutiny from all sides, and it won't be as quick as you have noted previously as the coronavirus relief package. Are we going to get back to, big old plain politics, or can President Biden unite two parties?
Well, this is almost certainly, even with Bezos saying there will be Republicans and Democrats here, this is almost certainly to be a Democrats-only exercise. Republicans have said, look, any tax increase of any size is not going to work for us. And Biden can push this forward with, members of his party alone, but the margins are super, super tight. In the Senate, they have to get everyone, all 50, and even yesterday, Joe Manchin of West Virginia, he said he wanted a 25% rate, not a 28% rate, so we're already starting to see some fissures. In the House, there's just a 2 or 3 seat majority that Nancy Pelosi will have. So it will be very difficult. It can be done, but the timing of how quickly it happens, that's really what's in the air.
All right, Bloomberg's Laura Davison, thanks for covering. We'll keep following your reporting on this. Thanks so much. Coming up, 2021 has already seen more SPACs than all of 2020. SPAC IPOs. We're looking into the SPAC craze and if the popularity is sustainable. That's next. Also, taking a look at electric cars and the electric car market. GM announcing it's getting into the EV pickup game. Shares rising on that. Tesla shares also up. Of course, we know Tesla has a huge lead on GM and electric cars in general. NIO shares also rising. This is Bloomberg. The SPAC craze continues. The number of SPACs and the amount raised has already exceeded the numbers in 2020, just 3 months into the year. But with almost 300 new SPAC IPOs, the performance of these blank check companies has lagged over the last couple of months. So big question is, are we in a SPAC bubble? Is this all just hype? Joining me now, Kevin Hartz, Eventbrite co-founder and chair and the backer of SPAC 1, which debuted last summer, and a second SPAC, SPAC 2, which was just announced last month, filed for a $200 million debut. Kevin, great to have you back here on the show. So you've been investing in tech for a long time. You've started a bunch of companies yourself. What do you think of the SPAC craze? Is this a bubble or not?
Well, there's two sides to this. I think first of all is that this is an amazing vehicle to get a company into the public market. The second side of it is that it's gone a little wacky. We've got an incredible amount of volume, and then all of a sudden last week it came to a skidding halt. We were one of 2 SPACs to go out last week. In a lot of times, and there's been a few weeks where we've had $12 billion of SPAC proceeds generated in just a week, and then last week 300 million.
So let's talk about the buzzwords, though. We're hearing a lot of companies say we're looking for the next unicorn. A lot of these jockeys looking for a horse to ride, or we're looking for the next big thing and technology. How do you separate the wheat from the chaff?
Well, the market and the investors are really good at doing that. It's not necessarily the SEC or other governmental organizations. It's really the market and a lot of bright and talented investors. They're feeling the SPAC fatigue, and they're really looking more closely at the SPACs out in the market. And so you'll see this continue to separate the strong performers from the underperformers as time progresses.
Your SPAC 1, you ended up acquiring a 3D printing company. Why 3D printing? And is that the future of technology?
Well, our broad mandate is really the innovation economy. I used to call it Silicon Valley, but Emily, you and I know we can't anymore because it just stretches so far around the world in so many different industries. And 3D printing, which is called additive manufacturing, is one of those. And it's an exciting business in the sense of really imagine that you don't have these big supply chains of parts coming from all around the world. Then imagine you can just print these things up in a factory. And there'll be some time before we realize that vision fully, but Markforged is on its way there.
Meantime, you've got SPAC 2 coming, and the description of what you're looking for is similar to SPAC 1. What can investors expect? What are you looking for?
A lot of the same. Innovative companies, great teams, massive markets, competitive advantages. Those are what we really stuck to in 1, and what we're looking for in 2. And then the second side in our second SPAC is that we have 0 warrants. So we're really looking for a partner that's going to appreciate less dilution, which every partner will, by having 0 warrants. I'm
curious, for the SPACs that you think might run into some challenges, could those challenges involve litigation? It's not just about making money, but what about some of the possible negative side effects?
Well, undoubtedly, there's going to be a lot of litigation in the future. It's just an unfortunate byproduct of partnering of these companies going after just not so high quality companies. And it's going to be tough to see when these retail investors lose their money, that they're going to end up, of course, suing. And maybe that's a good thing in this case. Nobody is ever excited about the legal system and lawsuits, but we do need a manner of separating out the underperformers.
Kevin, you were a partner at Founders Fund, venture capitalist for a long time. I'm curious how you would compare investing in venture capital to, the SPAC game. Obviously, it seems like it's such a different animal.
Well, it's surprisingly very similar. We're always looking for the same qualities of what will be an enduring business. What is something that we want to be a part of and own shares in 10 and 15 and 20 years from now? How do we find the next Amazon or Google or Microsoft or so on. So it's surprisingly similar. Now, the big difference in which is exciting is that you go out in this IPO in the public markets, and then you help bring that company into the public markets, and that's an exciting side of these SPACs.
Now, I also have to ask you, given that you co-founded Eventbrite, you were CEO for many years, your wife, Julia, now runs the company. What is your outlook on events in the future? Do you see a more hybrid approach longer term, even after we're all vaccinated and we're in this kind of new normal? Or do you see life and live events bouncing back in person just the way they were?
Great question. It's really been a monumental comeback. I think one of the greatest business comebacks was Julia and the team at Eventbrite fighting for survival in a period of March of last year, just a year ago, when the company actually had negative revenue, more refunds than sales. It was an incredibly bleak situation. Julia right-sized the company. She was able to raise funding under dire circumstances. And now it's very exciting to see the business coming back, and the business is coming back very strongly. We've always had an online events product, and that thing really took off. I'm not sure, I actually know that a lot of our creators, which we call our event organizers, will still stay in a hybrid state. It's a new normal, but most of the world is dying to get out and enjoy the roaring 20s as soon as we can get through the vaccinations.
All right, we'll see if that roaring 20s indeed comes to pass, what event life is really like. Kevin Hartz, Eventbrite co-founder and chair, will be watching your SPACs. Thank you so much for joining us. All right, coming up, Amazon warehouse workers in Alabama patiently waiting as their votes are being counted in a historic election that could lead them to unionize. More on what is at stake and when we will get the results. Plus later, Moderna co-founder Nubar Afeyan joins us to talk about new positive finding in vaccine efficacy, his thoughts on vaccine passports, and more. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Flipkart, the e-commerce giant that Walmart acquired in 2018, is making progress towards an IPO. Our Ed Ludlow with us with more. Ed, what can you tell us?
Yeah, so when Walmart took a 77% controlling stake for $16 billion for Flipkart back in 2018, it definitely raised eyebrows because of the market share the company had in the time. Fast forward to today, though, Flipkart has 300 million users. It has a huge inventory of products, and it really gives Walmart an e-commerce holding in India. So what we're hearing from sources is that an IPO, traditional IPO, could happen as soon as the fourth quarter. They'd looked at doing a SPAC, but decided that that was the main route and that the valuation could be as much as $30 billion. So a premium on what Walmart did the deal on in 2018. If you flip up the boards, investor reaction was pretty positive. Walmart had been lower for the early part of Tuesday trading and then buoyant, looking at this, looking at the financial gain that both companies can make. And as with all IPOs, it's not just about the money raised, it's about putting your name on the map. It's about the publicity. And sticking with IPOs or listings, we've got to talk about Coinbase. And one of the things I've been thinking about is, why are we so interested in this? Direct listing, the first ever large direct listing on the NASDAQ. Well, it's because the last valuation that we had for Coinbase on the private markets was around $90 billion. Astonishing. And if you flip up the boards, we've got the latest details coming after market on Tuesday. This is a company that's making money. The company says in preliminary results that they see net income between $730 to $800 million for the first quarter. That's on $1.8 billion of revenue. Emily, you cover all kinds of IPOs. I'm talking SPACs, I'm talking traditional IPO, I'm talking direct listing. How many of those have you heard that are already profitable and at that level, significantly more profitable than Coinbase was this time last year? Astonishing.
Absolutely, and after covering tech for 10 years, it is rare to see something like this. We'll, of course, be watching the direct listing next week. Ed Ludlow, thank you. Sticking with cryptocurrency, a recent pullback in Bitcoin's volatility may encourage other institutional investors to dive in. The question, though, remains, is Bitcoin a massive bubble or the digital currency of the future? Bloomberg spoke with Mike Novogratz earlier today on Bloomberg Television, founder and CEO of Galaxy Digital.
What's the S&P on the year? Up small, and Bitcoin is up 100%. And this week, Ethereum, which is the second largest cryptocurrency, had a monster move. And so what you're seeing is money continue to pour into the space. We just went over $2 trillion of wealth market cap in crypto. And so that's a pretty significant number, right? You think about it, there's $140 trillion of US wealth, $400 trillion of global wealth. So we're now up to half a percent of global wealth is in crypto. And that's growing. I think it'll be 1% by the end of the year.
We've seen a lot of usage in digital art, but where do you see this going? What else could this actually be used for?
NFTs are going to be with us for the rest of our lives, right? Art on the blockchain, collectibles on the blockchain, IP on the blockchain. It's all happening. And we're in the very, very early stages. So much that there's little mini bubbles that'll pop up and down, but don't miss the big picture. This is fundamentally going to change how we secure intellectual property from now going forward.
So am I right to make the distinction that this isn't necessarily a Bitcoin boom? This is a crypto, an Ethereum, a blockchain boom as well that you're following?
100%. Listen, Galaxy Digital was set up to participate in the whole ecosystem. We've made investments in over 100 companies in and around the space, from DeFi companies to protocols to security companies to custody companies and to DeFi companies. To NFT companies.
Talk a little bit more about how it's now not only starting to appeal to corporations, but there's been a lot of talk now of how governments could actually start getting involved in this. What happens if that happens? Because I keep hearing it sort of pitched as a good thing, and I'm not quite sure I understand how.
Well, listen, there's a bunch of different lanes in crypto. So Bitcoin has carved out this lane of store of value, of digital gold. And so most governments don't care if people are putting their money in gold. Listen, if they do a horrific job managing their finances, more people are going to want to take their money out of that country and put it somewhere else that's safe. Right now, Bitcoin is being seen in the digital world as that place. I don't think Bitcoin is going to be what we use to buy shoes or, sunglasses or Diet Cokes, right? You're going to see a war in payments where stable coins, central bank issued digital currency, stable coins vie for that space.
Mike Novogratz there, Galaxy Investment Partners CEO. Meantime, all eyes on Alabama as the vote counting begins in the historic election to determine whether Amazon warehouse workers in Bessemer will unionize or not. With us now for more, Bloomberg's Spencer Soper. So Spencer, why is the counting taking so long, and do we have any idea which way they're leaning?
As far as where they're leaning, not yet. They're still going through this tedious process of just determining whether individual ballots that have been submitted are eligible or not, like contested or not, without even looking at how the people voted. So that's still happening. The federal officials are telling us the vote should count, the public tallying of, looking at actually did people vote yes for a union or no against should begin later this week. That's the latest, detail we got from them. We're not sure if that means tomorrow or Thursday or Friday.
All right. Meantime, over the weekend, Amazon apologized for its now infamous peeing in bottles tweet that came from the official Amazon account in response to Representative Pocan about controversy about worker conditions. Amazon saying this was an own goal. We're unhappy about it. We owe an apology to Representative Pocan. The tweet didn't receive proper scrutiny. We need to hold ourselves to an extremely high accuracy bar at all times. What do you make of that?
It is a rare apology, and obviously Amazon has to kind of calibrate how it wants to engage. Historically, they really haven't engaged that much in these kind of Twitter spats, and obviously they've been getting tired of just being this kind of piñata that just keeps taking a beating from various politicians on the left for different social causes. Amazon just becomes this lightning rod about like wealth inequality and taxation and various things. So they keep getting pummeled, and they're trying to find the balance of, okay, how much do we want to engage versus not being too quick with our engagement, that we put our foot in our mouth.
Meantime, the National Labor Relations Board has determined that Amazon violated labor law in this case involving 2 employee activists who were fired last year who were raising alarm about warehouse conditions. What does that mean?
I mean, a lot of this stuff is basically symptoms about how Amazon can basically fire whoever the heck it wants and just, probably pay a penalty later. I think if anything happens with this, they'll most likely settle, give these folks some sort of payment, to settle the issue. Ultimately, they could be forced to hire them back and give them back pay and that sort of thing. But this goes back to the environmental activism and some employees who were agitating from within and calling for Amazon to be more accountable environmentally, and Amazon, dismissed them. And it could have just been a strategic violation of the law. They might have known, okay, this can probably get us into hot water, but let's just fire them anyway and quiet this down because there's not much penalty if we do it.
All right, Spencer Soper, keep us posted on that vote count. Thanks so much for the update. Meantime, Facebook saying it has removed 14 networks representing more than 1,000 fake accounts seeking to sway politics around the world, including in Iran and El Salvador, while misleading the public about their identity. Most of the networks taken off the platform were in the early stages of building their audiences. The move, one of the larger crackdowns by the social network in recent months. And coming up, good news from Moderna. A new study finds the vaccine still works at least 6 months after patients get that second dose. Moderna co-founder Noubar Afeyan joins us next to talk about it all. This is Bloomberg. Almost 169 million doses of the COVID-19 vaccines have been administered in the United States. Nearly half the states opening up vaccinations to everyone 16 and older. And President Biden says he wants all adults to be eligible for the shots by April 19th. All states but Oregon and Hawaii set to meet that target. Those 2 states currently set to open up vaccines to all adults May 1st. This as California plans to fully reopen the economy June 15th if the pandemic continues to abate. And good news from Moderna, the drug maker has found antibodies to the COVID-19 virus will persist for at least 6 months. Shares climbing on this new data. Joining us now for more, co-founder Noubar Afeyan, who's also the CEO of Flagship Pioneering, which of course launched Moderna. Noubar, thank you so much for joining us. So obviously this antibody news is great, though these variants are very troubling. South Africa, Brazil, you've got Pfizer testing a 3rd booster. What is your sense of how often we will need to get revaccinated once we get fully vaccinated?
Well, Emily, thanks for having me back. Yeah, indeed, it is good news that we've begun to see some good evidence of antibody protection lasting at least 6 months. That's as long as we've had to test it, and we expect that we will get more and more data, both from that earlier study and from the larger studies that we did later in 2020. So lots more to come on that, but that's encouraging. And as for the variants, I mean, look, our immune system is trained to detect many hundreds of threats on a daily basis, and variants are going to look like slightly different threats. And in some cases, they've shown that they can evade the immune response partially. But what we've shown so far is that some of the immune system continues to attack the variants, and we're going to have to keep a close eye on which variants are beginning to exist. And as you know, we've also started developing, just in case we need them, additional mRNA vaccines that will target some of these variants. So whether it's a variant vaccine or the original vaccine or some combinations of these, we want to be 1 or 2 steps ahead of the virus as it manifests changes to fight back against our immune systems.
Now, Moderna has been testing the vaccine on children ages 6 months to 12 years. My children are in that age group. What do you know so far, and when do you think the soonest is that kids in that age group will be vaccinated?
Well, these trials are done in a very prescribed way, and so we don't get early information. When we get the information is when we generally disclose it to the public, as we did in the main human trials that we did last year, phase 1, phase 2, and phase 3. And so this will be the same. It's going to go through rigorous testing. So I don't want to give a sense of when that might be concluded, but suffice it to say that we've said when we first entered into this that over the coming months, we expect to begin to gather data and share them to the public as to whether we see differences and the efficacy, safety. I should say that in the younger population, we're also testing some lower doses because we expect that perhaps some of those will be as efficacious, and we'd like to make sure we get the right dose. And so, more to come on that, but over the coming months, I think is a reasonable expectation. I can't be more specific than that.
Interesting. Okay. Now, it's hard to believe that Moderna was just a startup a few years ago that you started building in-house at Flagship, your venture capital firm that's focused on biotechnology. You've also got another company, Kaleido, that's been working on an oral treatment to fight COVID that's also seen some promising results. How confident are you that if you don't get vaccinated or even if you do and you get a serious case of COVID, that a drug will be able to save you?
Look, I think that everything we can do based on biomedical research to delay, deter, attack this virus, we need to do. And what you're seeing is this industry that's largely been out of the mainstream, let's say, conscience of the world, which is the biotech industry, is suddenly kind of being called into action to provide any and all means to beat back this virus. So certainly Kaleido, another one of our companies, there's yet another one called Avelo that showed some very interesting data in their treatments. So I think that there's going to be many different treatments. We need to let the science dictate our decision making. We need evidence in controlled trials. And as we get that, I definitely believe that the arsenal of approaches to beat back this virus, even if it does infect people, will grow very rapidly.
Now, you've been hiring a number of new people as CEO partners, if you will. You hired Mike Nally, who used to work at Merck, Chris Austin from the National Institutes of Health. How will this new talent help you on your quest to, develop new technology that'll essentially save lives? Where does this take you next?
Well, Emily, as you mentioned in your introduction, Flagship Pioneering, which is the firm that I co-founded and lead, based in Cambridge, Massachusetts, it's really a new type of company that itself invents and launches new companies. And we've been doing this for some 20 years, but over the last few years, we've scaled up our operations so that at any given time, we have some 12 to 14 now companies that are all distinct platforms of their own that are attacking one or another aspect of health across all disease states, across all aspects of medicine, but also sustainability. We're very active in the agricultural technology, nutritional health area. So what you realize when you do this systematically is that it's one thing to make the early inventions and conceive of these transformative platforms. It's another thing to actually create and launch and grow a company that can maximally derive impact, deliver impact, and also derive value from this activity. And that depends very heavily on forming a team of pioneers, and the leadership for that team. And over the years, you could imagine we've probably hired 100, 150 different folks into CEO roles, let alone all the other leadership roles. And what we've learned is that it takes a particular kind of individual together with the supporting team to lead these projects. And we're finding some of them coming from some of the leading pharmaceutical companies, like Mike Nally, who we announced joining us just last week to lead one of our very exciting next generation companies called Generate Biomedicines, or Chris Austin leaving the NIH, having led one of their big translational institutes leaving with his medical background and leadership background to come and take on this role of CEO partner. So we've got about 7 such folks we brought on board in the last 9 months. They're each leading their own platforms, and we're going to learn a lot about how to get better at matching the human capital, the inventive capital, the ideas, and the financial capital to be able to create these disruptive breakthrough platform companies.
All right. Really interesting model. Thanks for sharing that with us. Moderna co-founder and flagship pioneering CEO Noubar Afeyan. Noubar, always appreciate you stopping by. Still ahead, why shortages of a $1 chip sparked a crisis in the global economy. We'll talk about the chip shortage impacting industries beyond technology next. And as we head to break, taking a look at some chip stocks here, all sinking, of course, this as the chip shortage continues. Lots of conflicting opinions about just how long it will last, but everyone agrees it is here and it is not great. We'll discuss more coming up. This is Bloomberg. The Biden administration's plan to address crunch in the semiconductor industry and increase the domestic manufacturing of chips could represent a long-term risk to industry profits. That's according to analysts from Raymond James. Bloomberg, meantime, reporting that Biden's top economic and security aides are planning to hold a chip summit next week, inviting industry leaders. Joining us now to talk about this global shortage that's impacting the $450 billion industry, Daniel Flax, Managing Director at Neuberger Berman. Daniel, thank you so much for joining us. Always great to have you here. What do you imagine Biden's attention to this massive shortage? How will that impact the shortage itself and the industry at large?
Emily, I think the administration wants to foster an environment where companies will invest even more here in the United States and secure the longer-term supply of semiconductors. Of course, any construction that starts today will take a few years before it actually yields additional chips. I think the fact that you have an administration and an industry that would like to add capacity is positive. So if we step back and think about the dynamics here, in the near term, we're going to remain supply constrained. I think some of that will ease late this year and into 2022. But longer term, strategically, clearly the semiconductor industry will become more and more important to a variety of industries beyond just technology.
You know, it's interesting. I've heard conflicting opinions about how long the chip shortage will last. Qualcomm CEO telling us we'll have line of sight by the end of the year. IBM, Intel, ARM, CEOs of all of those companies say it's going to last multiple years. How long do you expect we're going to be in this for?
I think it's going to be a factor for the next 4 to 6 quarters, Emily. And different industries, for example, automobiles, they expected demand to recover less quickly than it has, right? And so you have certain industries more impacted than others. But I think if we look out beyond the next 18 months, what's clear is that this build out of the digital infrastructure is going to require more and more intellectual property from the semiconductor industry, clearly more manufacturing at scale. And so the longer term secular drivers here are healthy. The dynamics in the shorter term are going to depend industry by industry. But I think what's most important is that capacity is being added, and that ultimately will help solve these constraints that are going to be with us for a little bit still.
Is the lack of capacity affecting all countries equally, or do you have any concern this could give China, for example, an advantage over the U.S. in technology?
Well, all of these companies are global. So if you look at companies like Taiwan Semiconductor or Intel, they have operations all over the planet. And so, and their customers, if you take a Qualcomm, which you mentioned, also have customers all over the planet. And so this is a global issue. I think what's going to happen over the next 2 to 3 years, we've seen governments, certainly China, the US, increasingly are going to look to have more local supply for both strategic reasons, certainly to help out some of their industries, I think longer term, Asia is still going to remain critical, but I think the U.S. and the European Union will have more local supply, which is a longer term. It helps to balance things a little bit over the longer term, but it'll take time.
All right. Well, thank you for giving us a long-term view. Daniel Fax, Neuberger Berman, always good to have you here on the show. A big reminder, Bloomberg Technology will have lots more analysis of the chip shortage issue, when it might resolve, tomorrow in a special called Chip Crunch. We're going to highlight conversations with analysts, chip makers, car manufacturers, and more, bring you reports from around the world, from Europe to Asia. Do not miss it. Thanks so much for joining us. I'm Emily Chang in San Francisco. This is Bloomberg.